You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally.
I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's
Really?
gone up.
Hey, Internet, welcome to another episode of New Foundations, the podcast brought to you by Acropolis, which is the premier Bitcoin Treasury platform for businesses. Joining me in the studio today is my friend Scott Marmoll, and we're going to talk all things Bitcoin Treasury companies, private versus public, what it really means to be a Bitcoin Treasury company, aside from kind of the pure play strategies of the world. And we're going to dive into this report put out recently by River, a research report kind of outlining some really interesting facts and figures related to private business adoption of Bitcoin Treasuries. And Scott, you're going to see from this conversation is the man for the job. So Scott, thanks for joining me.
Yeah, happy to be here. Thanks for having me.
So why don't we start with just a little bit of background on your work experience, how we came to get friendly, and kind of your relation to the Bitcoin space.
For sure, yeah. So I've started describing myself as a recovering investment banker, although I'll likely continue to execute investment banking type private market transactions for a long time. But what that's meant is that the last 8 or so years kind of always worked on private middle market and lower middle market M&A transactions, whether that's selling the majority of a business to a private equity fund on behalf of an owner, or sitting in the private equity role and making those investments directly, or raising debt or other non-control capital to fund growth or fund a dividend or whatever the other opportunity is. Maybe it's acquiring another company. And all along the way, kind of, if that was the 9 to 5, the 5 to 9 has been Bitcoin. And every cycle have kind of wondered, how do I merge these two? And I think by chance, or maybe by your good work, we ran into each other and started exploring ways to make that happen. I know through my time, most recently at Cantor Fitzgerald, we explored this with several Acropolis clients, and it's been validating for me. I think there is for sure a lot to be done in the private markets with relation to Bitcoin treasuries and private transactions to kind of accelerate that Bitcoin adoption. So excited to be chatting with you today. I'd say, to describe myself in current role, I am an independent consultant and investment banker focused on Bitcoin companies, which is a really cute way to say any company, because at the end of the day, I think folks that listen to this podcast and you for sure know that every company needs to be a Bitcoin company at some point. And so whether it's a very boring business that doesn't do anything related to Bitcoin, but is run by owners and executives who understand Bitcoin, or a Bitcoin native business building on the space or on the ecosystem, those businesses all need investment banking, capital markets work, and help from folks who understand Bitcoin more than they understand crypto. So that's a little bit about me, and excited to have this conversation.
Yeah, and I'm really excited for whatever comes next for you. You're a real powerhouse in the space and do a lot of great work behind the scenes, but kind of now have the role, the freedom to really come out and be more of a outspoken Bitcoiner and work on behalf of clients to do some of the financial engineering work, which is maybe, I don't know if that word would be kind of triggering for you when it comes to helping a company raise private debt or equity capital, but it kind of is. It is financial engineering to some degree. And you sent over some notes ahead of the conversation. We've been swapping notes regarding this River report that we're about to get into. And one of the places that we both agreed it made sense to start is this idea of a Bitcoin Treasury company. Basically just defining what that means, because when you say it, most people probably think of strategy and Metaplanet. But the truth is really, like you said, every company is going to hold Bitcoin because it is just the superior savings technology of our time. And so how would you kind of define Bitcoin Treasury company? I know you have two categories.
Yeah, for sure. And I think in some ways we all become financial engineers as we come to understand Bitcoin, right? We're trading fiat dollars printed into infinity for the scarcest asset in the world. And I kind of think about Bitcoin treasury companies in the same way, which is there are two emerging trends. One of them has been slowly creeping into existence, which is just literally using Bitcoin as a treasury. And I think their personal lives have been doing this for a number of years and found it to be a very positive way to store value and take it into the future. That's just taking, that's spending less than you earn, taking the excess and storing it in Bitcoin for the long term. And folks have found that extends their purchasing power into the future in a really positive way. That's Bitcoin treasury companies that we saw kind of pre Michael Saylor, right? There's a couple of companies here or there, you might not even know who they are, that are just taking cash flow and profits and holding some of that or even all of that in Bitcoin. And then the other category, and this is not mutually exclusive, but the other side of that is financial engineering, which can sometimes be a nasty word. But the reality of that side of it is that if you can issue debt or equity or other, exotic securities and use the proceeds from that transaction as a company, as an issuer, to put Bitcoin on the balance sheet in an accelerated way. I like the phrase you're using future cash flows you're borrowing against or issuing securities against, whether debt or equity, against future cash flows and the equity of the business in order to buy Bitcoin with tomorrow's money at today's prices. And for those of us that have watched the Bitcoin cycles play out, there's quite a bit of volatility, but any 4+ year time frame, using future money to buy Bitcoin at today's prices has been a positive trade. When I say a positive trade, I mean that the cost of that capital that the return on that Bitcoin held earlier outweighs the cost of that capital. Now, the whole game in between that is managing the exposure such that you don't become a forced seller at the worst time. Because Bitcoin's volatility means that if you give yourself a bunch of current liabilities that you have to pay and service with cash, and the only thing you have to service that is Bitcoin, then you may find yourself in a position where you're a forced seller. And so I think the entire game for the Bitcoin treasury companies at large, whether they're just using their cash flows or also tapping the capital markets to accelerate that strategy, the whole strategy that Michael Saylor has robbed us of this very useful word. that whole strategy comes down to proper structuring and sizing so that the equity and cash flows of the business can service the outstanding sort of obligations in a way that doesn't ever find you reaching into the stack of Bitcoin and having to sell it at the worst time. So I think those two sides are really important to differentiate, because I have a strong confidence that some of the financial engineering side of this game is going to end up on the wrong side of the trade. But right now, I think there's a huge opportunity for both parts of the strategies to be defined as a Bitcoin treasury company to be hugely valuable to shareholders.
And you kind of called out that on a long enough time horizon, every company will become that first definition of the Bitcoin treasury company, which is just storing your retained earnings in a better store of value asset on the balance sheet with Bitcoin. So that we obviously would agree with at Acropolis. But one thing that I found interesting was that you kind of alluded to the idea that that's really step one, and that the financial engineering aspect will kind of inevitably pique the interest of any company that starts to just do something as simple as storing their retained earnings in Bitcoin, that the financial engineering aspect is just it's going to be something that kind of calls to them, and that a certain percentage are going to explore that.
That's right. I mean, I think I've seen this play out in the private markets completely unrelated to Bitcoin, which is founder owners of their businesses in the middle markets. Usually when they finally are talking to an investment banker like me in my past roles, they're not realizing that they've never levered their balance sheet and that they haven't really fully monetized the asset that is the equity of their business because they've taken a very conservative approach. And I think in the same way, as you move your business onto a Bitcoin standard, inevitably you'll realize, okay, to the extent that I have confidence in the future cash flows of my business, and there are people that will stand on the other side of that trade for where I can raise capital to put Bitcoin on the balance sheet, I would be doing myself a disservice not to pull forward some of that accumulation. In the same way that most of the folks who I've advised on the sale of their business to a private equity fund realize, wow, okay, with the right amount of leverage, this is manageable. And it has created a huge amount of value for the individual, the shareholders, the company, and the future growth of the business. So I think that is going to be a hugely important trade that folks come to understand. But for sure, you first have to come to understand that using Bitcoin as a treasury asset is the basis for that growth.
And one thing that you and I have encountered a lot in the kind of Acropolis to your seat at Cantor relationship, where you were advising and supporting transactions in the private debt and equity capital markets for some of our clients who wanted to do this financial engineering, was it came as a shock to some of them that investors would not just give them money because they're telling them that they're going to go buy Bitcoin with it.
That's right.
We had to break the bad news to a lot of these companies, or perhaps not bad news, because you always want to build a company using kind of sustainable financial models, but that the capital that they would raise, either through debt or equity raises, would really only be based on the actual financials of their business, the current assets and equity of that business. So maybe speak to that, because I think even in public markets, folks look at strategy, and if you haven't looked deep enough, you think that they are levered against their actual Bitcoin stack, but they're not. They're actually levered against the balance sheet, the equity in the business. None of the Bitcoin is actually marked as real collateral for the debt that they've raised. So maybe speak to that and dispel any illusions for folks who need to kind of swallow the bitter pill.
Yeah, for better or worse, the public issuers, and maybe strategy is in a category of its own in this regard, but certainly a small handful. I'm excited to see what this looks like for Jack Mallers and the XXI Cantor Equity Partners deal. I'm curious to see if they'll have the same access, and maybe Adam Back's business as well. But setting aside those folks, because those folks have basically gotten to a scale where they are able to issue securities that are indirectly backed by the Bitcoin. And so when a private markets business owner watches that, he goes, okay, well, I'd love to do that. And the reality is that that is a pretty exotic trade. And I have my own opinions about how well that's going to go for everyone that tries it. But for the private markets, it doesn't mean that there isn't a chance to have a transaction in that way, but it has to be a little bit more rooted in reality. And in the private markets, lending against a founder-owned business is already a little bit further out the risk curve. And so the reality is that my belief, these transactions haven't ever really happened in the private markets yet. I think that they're coming. And my belief is that the institutions, the couple $1 trillion of private credit money that represents direct lending in the US, they're not going to wake up tomorrow and say, sure, we'll literally just give you money way beyond the scale of anything you could ever pay back with your cash flows to buy Bitcoin. But what I do think that they'll get comfortable with is, okay, you've got a nice business. It's under-levered because you're a founder owner, and typically that's the case. Here's 3 turns of debt, for example. And when I say turns, multiples of earnings, EBITDA, a proxy for free cash flow. And this is entirely illustrative, but something conservative where the previous experience of that direct lender is, okay, I give Chase and his business 3 turns of debt. They issue a special dividend. Chase buys a yacht. And what secures my loan as a private credit investor in this illustrative example isn't the yacht. I actually can't go after that at all, but the equity in your business. And so there might be covenants and requirements around cash flow. There might be certain amortization of the loan that requires the company to pay, principal quarterly. There certainly will be an interest component to it. Some of that might be cash interest. Some of it might be paid in kind, where the interest obligation just accrues to the balance of the loan. But the point being, while Michael Saylor is enjoying a near unlimited capacity to issue new securities and really beyond the scale of the strategy operating company, I think in the private markets, at least for the time being, the scale of opportunity is really limited to the scale of the business. And so for the direct lender world, that's probably maybe 2 million or maybe upwards of 5 million as a minimum threshold of EBITDA on an annual basis, which would represent a scale of a business where, as a direct lender, you can write a check big enough to make it worth the time and effort that goes into that transaction. And there's enough of a business behind that, yes, things might go up and down, and the business might have a ton of growth or a contraction period, but ultimately the lender can get enough confidence, okay, we're going to get our principal and interest back at the end of this transaction.
And obviously, the key number that makes all of this possible is Bitcoin's compound annual growth rate of 40% plus annually. Obviously, there's often 1 year in that 4-year cycle where you get a pullback, but if the terms of the debt are a 4 or 5 year term and they're under 40% in terms of the interest expense, then theoretically, so long as you're not putting the operating business at risk, there is a spread, there is a return to be made there and a benefit to acquiring Bitcoin at today's prices with using tomorrow's revenue, as you kind of called out. So maybe kind of explain the role of Bitcoin's compound annual growth rate in this, because there is a reason we're seeing a lot of this activity around Bitcoin as opposed to other assets with maybe less predictable or less performance.
That's right. I mean, at the end of the day, the financial engineering that we're talking about is the spread between the interest rate on a loan and the forward annual growth rate of Bitcoin. The devil is in the details around the structuring. If the transaction, if the debt that you're taking on, let's just assume it's debt, because in the private markets, I think it's mostly going to look like high interest sort of mezzanine debt from the direct lenders. But if that has a very high current pay sort of interest piece to it, or amortization component to it, you might have 10% of the loan due in a bear market year. That can make it a really hard trade. So I think both the borrower and the lender should be thinking about, can I service all of the upcoming costs to the business and to this loan without touching the Bitcoin? That'll be really important. But yes, that's the whole trade. And the reality is that if it weren't for Bitcoin's incredible growth, both past and present and expected future, then there would be no reason to frantically borrow to accumulate more Bitcoin. But I think folks that come to understand Bitcoin realize the total addressable market for Bitcoin is likely somewhere between 500 trillion and $1 quadrillion, representing the total value of everything in the world. So, at $100,000 per Bitcoin, we're talking about a 250 to 500x total potential opportunity from here in today's dollar. And now I think your venture world folks will say, well, total addressable market is a great metric. Assume you capture 5% of it. The shortcoming in that assumption is that they're thinking about businesses. Businesses can inevitably only capture some portion of their total addressable market. I think money is not a business, it's a protocol, Bitcoin being the best of it. And in the game for winning protocol level adoption, it's a winner take all market, not a winner take most. And Bitcoin seems to be the obvious winner in that process. And so it really is this trade saying, okay, I don't know the timeline, but I can buy Bitcoin for $100,000 today, borrow it against the cash flows of my business. And at some point in the future, that'll be worth a ton more in today's purchasing power. All you have to do to succeed in that trade is manage the cash flow that goes against borrowing that money. That's not a trade for everyone. There is certainly a case to be made for just staying humble and stacking sats and not leveraging up your balance sheet. But if someone has high conviction in their business and higher conviction in Bitcoin, this is a really interesting trade. And I think from the lender side of things, there's $2 trillion of private credit direct lending money in the United States. That number is only going to grow. Those dollars, those investors are starving for a deal. They like to say in private equity and private credit, the only thing worse than a bad deal is no deal, because those folks only get paid when they have deals closing. And so there is this agency problem where there's a ton of capital starved for transactions in a relatively slow M&A market, where historically the private credit direct lenders are lending to the private equity folks that are buying out companies. And those private credit direct lenders are having to find new sources for transaction volume. And I believe that individual owners and executives of companies that have come to understand Bitcoin could represent a really useful source for new deal flow for the private credit funds.
And you also have this ever-expanding amount of dollar or fiat liquidity that is not beating true inflation by owning treasuries or money market funds, arguably. And if they lend money in this type of a transaction, this is kind of referencing another one of your notes to tee you up here, is the idea that if you lend these dollars to a company that is going to use those dollars to buy Bitcoin, as opposed to, referencing your previous example, lending it to Chase's business so that Chase can go buy a yacht, that Bitcoin is sitting on the balance sheet. It is there in terms of equity. It is liquid value that could be sold off to make good on an interest payment and interest expense. So kind of speak to the kind of risk calculation there.
So this is where I started to realize that this is going to happen, whether the private credit lender world comes to understand Bitcoin or not, is because in having conversations with these institutional investors, I walk them through the type of transaction I'm envisioning, and they're saying, okay, well, if I would underwrite a dividend recap, which is that scenario we're talking about where Chase's business issues the loan and then and then he dividends out that cash and buys a boat with it, the boat is not recourse to that loan. So if a lender is comfortable with a transaction where the cash essentially gets lit on fire as soon as it closes, and the only recourse for the lender is the equity and the cash flows of the business, even if you don't like Bitcoin as the lender in that scenario, this is net better than that because the Bitcoin goes onto the balance sheet within the operating company and stays as a part of the overall equity value, which secures the loan. And so I believe the learning curve, because the problem is we're not going to re-educate the entire private credit, institutional investor market overnight. The beauty of this is they don't have to understand it, because if they model this out on their end and write the value of Bitcoin down to zero, well, then this should have the same leverage profile and appetite as a traditional dividend recap. If they assign any value at exit to the Bitcoin, then this is a better deal than a typical dividend recap. And then I think you let one cycle go by while these folks have done a couple of these deals and they see what happens to the equity value of a business holding Bitcoin on its balance sheet. And all of a sudden, the private credit funds are starting to find other ways to get even more exposure to the Bitcoin asset class through the lens of private credit.
Yeah, and then now let's look at it from the other side of that transaction. So that's kind of through the risk managed lens of the lender. But now let's look at the business. And this is where we'll start to get into the River Report a bit more. So even in the River Report, they have examples of companies like Apple and other Magnificent Seven companies that it shows what would have happened if instead of doing dividends or stock buybacks, they would have allocated just 1% of that capital instead of letting it leave the business. Or decapitalizing the business, as Saylor would say. But they actually instead buy Bitcoin and retain that liquid economic energy on the balance sheet for future optionality. When I look at this, I think share buybacks are a thing of the past, and that, I'm not the first to say that Bitcoin is the new share buyback. But do you think that this is just a matter of time before even, S&P 500 companies start to do less and less share buybacks? Is it going to be kind of a proportionate thing where they do some share buybacks and some Bitcoin acquisitions, and then eventually it just flips to no more share buybacks, only Bitcoin acquisitions? Or are they going to see it as a one or the other, and it's just going to, whatever capital they were going to allocate to a share buyback that year will become a Bitcoin acquisition?
Yeah, no, I mean, it's a great point. Look, I think that historically buying back shares is your next best alternative when your investors are wanting to have you distribute cash. And as an operator, executive, or insider of a business, the last thing you want to do is distribute cash and like you said, decapitalize the business. On a Bitcoin standard, I think that'll even more so be the case. I think the case for share buybacks is if you're trading for less than you think it's worth to own the business as an insider. And so to get into the sort of MNAV discussion, I would say that if you're trading at a discount to MNAV, then you should buy back shares, because that is an instantly accretive transaction. Just the academics of it would be if your shares are trading for less than one MNAV and you like to be long Bitcoin, then you should buy back some of those shares to bring that back to parity. And yeah, I think that the going into the next 50 years for businesses, what do they do with their cash? Well, one, they put it into Bitcoin. And then what do they do with that Bitcoin? I think as an operator, you're not going to want to distribute that Bitcoin. As a shareholder, I'm going to want you to distribute that Bitcoin. And that'll be the friction in the go forward. And I think anytime you're trading above one MNAV, you should issue stock. And anytime you trade below it, you should buy back stock. And in the meantime, you just try to get your investors not to demand that you distribute the Bitcoin.
Every business will hold Bitcoin. Some already do. Others are developing a plan. Acropolis is how smart companies take action today. Built on multi-institution custody, Acropolis delivers a turnkey Bitcoin Treasury solution designed specifically for businesses. Here's why that matters. Multi-institution custody is the breakthrough that unlocks the corporate adoption of Bitcoin. It eliminates the need for employees to hold cryptographic material and removes reliance on any single custodian. Instead, Bitcoin is secured using a 2 of 3 multi-signature quorum, where each key is held by a separate, regulated institution. No single party can move funds on their own, eliminating single points of failure and greatly reducing risk. We act as an extension of your treasury team, managing institutional grade custody, insurance, continuity planning, and strategic advisory, so your company can adopt Bitcoin confidently and securely. If your team has been sitting on the sidelines, unsure of how to get started, or worried about getting it wrong, this is your signal. Visit acropolistreasury.com and schedule a consultation. Bitcoin is reshaping corporate finance. Don't get left behind.
Yeah, so let me maybe add a layer of nuance to this. So you said anytime you're trading below 1 mNAV, you should buy back the stock. But if Bitcoin's compound annual growth rate is 40%, and I'm trading, let's say the company that I'm at is trading at 0.9 mNAV, that's a smaller delta than what Bitcoin's compound annual growth rate is. Should I not instead be kind of weighing that gap against Bitcoin's compound annual growth rate and say, like, maybe I would only buy my stock back at a 0.6 or lower of mNAV? How do you think through that?
It's a good point. I'd have to sit down with the math. I mean, the math should be pretty straightforward, but I'm guilty of never being able to do the algebra on the fly. I think essentially buying back the shares when you're trading at a discount to mNAV is effectively accretive to the remaining shares outstanding in a way that gives them more Bitcoin per share versus buying spot Bitcoin. So I think it would be that at any point below 1, you would start to want to buy your own stock before you buy more Bitcoin. But there might be some nuance in there, especially if there are other parts of the capital stack versus just simple common and Bitcoin on the balance sheet.
Right. Yeah. The other argument there would be that you need to almost defend your mNAV to some degree, and that there's value in signaling to the market that, you will be buying back your stock anytime it falls below a 1 mNAV, so that you can kind of push yourself closer to that premium territory where you can get back to issuing shares to buy Bitcoin.
Yeah, this gets more academic too, but the arithmetic really does actually say that if you're trading below 1 mNAV, you should sell Bitcoin to buy your stock back. That becomes a much more of a PR discussion around how does that get received by the institutional and retail investor base. But just the math on its face would suggest that that is a positive carry trade, thinking on a Bitcoin standard. But yeah, I think there's probably a lot more nuance to it when it comes down to executing that trade.
Yeah, and for listeners, these are the conversations that I love to have with Scott offline. We love to chat about these types of things. So glad to be able to bring his mind to our listeners. Digging into the River report a little bit more here. According to this research report, in terms of private company Bitcoin adoption, in the first 8 months of 2025, in the first 8 months of this calendar year, Bitcoin inflows to business balance sheets have already exceeded the total for all of 2024, not by little, but by 12.5 billion already. 2025 against last year, 2024, which you could argue, for those of us that have been following the space, was already a hot year in Bitcoin treasuries. What do you make of this ramp up? Is this mania? Is this logical conclusions for business operators that own Bitcoin and have seen it perform in their personal balance sheets and are just making sure that their companies are benefiting to the highest degree possible? What do you make of 12.5 billion over in the first 8 months of this year compared to last year?
Let me start with, I love talking about, I'm glad we're moving to this report. I like to talk about the private markets because what we just spoke on the mNAV is the full depth that I have managed to generate. And I think the exotic securities in the public markets are for someone else to understand. I'm a private markets guy. And what I've found so interesting in River's report is that it's clear there are a bunch of businesses. It can't just be Bitcoin businesses that are, in my opinion, relentlessly accumulating Bitcoin. And they're not getting the limelight, love, or attention publicly that the public treasury companies are, partly because they're private. And I think River is an excellent business and very well run. And the business client service is probably going to skew SMB. And I think some of the data they shared suggests that much. 75% of the businesses they're servicing have, I think it's less than 50 employees. Those are dynamics where the owner is likely the key executive and also the key decision maker. And what it says to me is that there are individuals who are Bitcoiners and own businesses and are using that business to accumulate Bitcoin, not just on the personal side, but through their business entity as well. And I think that trade, yeah, like you said, it seems to have picked up in 2024. It seems to be really ripping in 2025. But no, I don't think it is going to slow down. My hunch is that the type of customers, both on the retail and on the business side, that River attracts are not sort of quick flip in it for a little while following a hype cycle. I believe that the folks that wind up on River's platform are Bitcoiners, and those folks are and obviously have been accumulating Bitcoin for the long term. So I think it'll be really interesting to watch. I'm grateful to River for putting out this report last year and this year. I hope they put it out every year, maybe even quarterly, because it'll be fun to watch that metric continue to trend. I expect it to go higher, faster, not to sort of top out.
I would expect the same, in part because the folks who have already decided to embark on a Bitcoin Treasury strategy, again, in that definition, the first one, where they're just putting free cash flow or a portion of profits into Bitcoin as long-term savings for the business, they are going to experience the growth of Bitcoin's performance, and they're never going to look back. This is not something where they're going to, negate the strategy over the next few years. If anything, they're going to have proven that they were right, proven to any other shareholders in the business that this is a tool for economic growth, and they're going to double down. And I see this as a one-directional trade for long-term Bitcoin savings on the balance sheet. One thing that I found interesting, that you just kind of raised is this idea of kind of consensus building. With individual investors, ourselves, our personal Bitcoin holdings, you have a consensus of one, or, we like to joke, maybe a consensus of two, because you got to get the wife on board before you can really make that acquisition. But with private companies, it's kind of the next stage up. You might have a founder, co-founder team where they're still the majority shareholders. And if they've experienced the benefits of Bitcoin in their personal lives, they can really force that discussion amongst the company, and they can force the direction on the balance sheet. But as you get into a larger company with more shareholders, more consensus building that needs to be done, that's why we don't see these larger S&P 500 type companies acquiring Bitcoin to the same degree, is because it really only takes one person with a misunderstanding, a misconception of Bitcoin, some FUD in their head to veto a deal like this, veto the strategy, not to mention kind of the reputational risk for certain team members to try to bring this to the board. Because this is the type of thing that if you bring to the board and Bitcoin draws down 30% the next day, you could lose your job. And these are cushy jobs, not the kind of jobs you want to lose. And a lot of the folks running these operating businesses, they are not equity incentivized operators in the way that a founder would be, where the real outcome for the business is based on an acquisition event, a maturity event in the future that sees their equity value appreciate drastically over time. So what do you think about just the idea that smaller the business, the more they'll be able to front run the larger companies into the future, and that this is really an advantage that smaller businesses have over larger kind of bureaucratic companies, and that they need to lean in?
Totally. I mean, I think you hit it right on the head. And it's funny, it's the exact opposite. And now the Treasury strategy of old being some sort of basket of U.S. Treasuries to be, some sort of yield beyond deposits. And if you can't get FDIC insurance above $250,000, why not? If you're Apple, if you have $100 million of cash on the balance sheet, you don't want to distribute it. Yeah, you might buy back some shares, but you'll do something with that cash. And historically, the access problem has been flipped on its head, which is, if you have $100 million of treasury of cash, then you can go to an investment bank and get some pretty specific and structured access to U.S. treasuries and other securities, other marketable securities, that gives you a better return than your mom and pop that just has cash sitting in a Truist account for 0.01% interest. Bitcoin flips that on its head. Bitcoin is about access for anyone, and anyone in the world can use Bitcoin without permission. And so it's really wonderful to watch the adoption of Bitcoin in the business world kind of happen in the same way. Michael Saylor is an outlier. He's got the same sort of power and control over his business as your typical founder, owner, entrepreneur in the private markets. But just the scale of the business clients that River has, that seems to very much skew SMB, and that is really positive. I find that trade interesting, and I think it'll continue. You're absolutely right that to convince a board or a shareholder base that this is positive for the stock and the public markets is a much longer slog than it is to, convince our partners at home that we need more Bitcoin.
So here was another piece of information from the report that actually surprised me. And should be a good one for us to dig into. So 95% of Americans have heard of Bitcoin. Okay, that would make you feel good, right? That's positive. Okay, here's where it all falls apart. Only 6% of Americans are aware that Bitcoin's supply is capped at 21 million. So 95% of Americans have heard about Bitcoin, but only 6% have heard of the 21 million hard cap, which is honestly probably the first thing you learn about Bitcoin. It really makes you wonder what these people think they know about Bitcoin. So
Sure.
we know there's a lot of FUD. What do you make of that? 95% have heard of Bitcoin, only 6% know that it's capped at 21 million.
So this is, as someone who tries his absolute best, despite a very busy life personally, to contribute locally to Bitcoin meetups. I'm based out of Charlotte, North Carolina. I'd like to think we have the best Bitcoin meetup in the world. And when I can, I go to events and help host educational events. This is an education problem, but I'll start with the good news. If you surveyed everyone in the world about fiat and then asked them how it worked, I think that the metric would be that everyone has heard of fiat dollars, US dollars as money, and absolutely not 0.01% of them understand how it works, because even the folks architecting this system have lost control of it and do not understand how it works. There's a clip from that Modern Monetary Theory documentary where one of the folks who absolutely should know how it works could not in a few minutes explain the Treasury and Fed relationship. So there's the bright side of that otherwise pretty dark metric. And I would say, I think people hear about Bitcoin because its volatility puts it in the news, both positive and negative, every cycle. And ultimately, I think every cycle you get whatever massive amount of adoption, and then 95% of those folks go away. But the 5% that stay become educators, and they become very convicted in their position, and then they help grow. And so just like the volatility of the price, huge upsides, 80% drawdowns, I think we have the same thing in Bitcoin awareness. And I'm doing my part individually to help buck that trend. But yeah, that metric doesn't shock me.
Yeah, and you called out volatility there, which I agree. If from the conversations I've had with everyday people and Bitcoin gets brought up, yeah, they don't mention, oh yeah, I know it's a 21 million hard cap. They say, I hear it's too volatile. So volatility probably is the number one word associated with Bitcoin in the minds of the everyday American. But in this same report,
Page 15,
we see that Bitcoin is now, across a number of traditional metrics, less volatile than gold. Now, you could argue that that's because gold has ramped up in volatility recently because there's a lot of smart money that is fleeing to sound money, hard assets, in response to, rising U.S. debt, 37 trillion, soon to be interest rate cuts, disputes on the world stage amongst tariffs and China, Russia, BRICS nations trying to establish their own version of international trade and currency. So what do you make of gold's volatility in recent months and this idea that maybe Bitcoin is at such a large total market cap now of over $2 trillion that just because of the law of large numbers, that Bitcoin itself will become and is becoming less volatile over time?
I loved this page. The fact that the Bitcoin 60-day average of volatility has just sort of gone below gold. So exciting. It feels like the perfect gotcha for that conversation where someone says, oh, Bitcoin's too volatile. Unfortunately, I don't think it's going to resonate because volatility is a statistical measure, and almost everyone using the word volatility in common parlance at a dinner party does not know that they're referencing a statistical measure. They're just using the word for a perception of discomfort when the price goes up or down. And so, yes, it is a undeniable fact that currently Bitcoin is less volatile than gold. I don't have a strong opinion on whether that will continue in that trend. I think if you look at what happened in Weimar Germany, the volatility on the price of a gold mark against a German mark actually trended up as the country sort of demonetized off of their paper currency and went through hyperinflation. So I don't know if this trend will continue. It's a nice talking point, and maybe to the sort of financial professional worker, you can resonate with them on that. I would say my approach still, at least on the personal side, is yeah, Bitcoin is very volatile. So too are many investments. And if you need the cash that you're putting into Bitcoin in the next 4 years, I don't recommend that you use that cash to buy Bitcoin. It for sure is a long-term trade. And I think the advice of 4 years or more should probably persist for a couple more cycles. But we'll see. This is definitely a positive trend either way.
Yeah, that's absolutely right. At the end of the day, that's how we consult our clients at Acropolis is if this should be treated as the last money to touch, and ideally money that you don't need for the next 4 to 5 years, because the volatility may come back regardless. The worst thing you can do when approaching Bitcoin, which is really like a can't lose asset class over the long term, is to have to sell at the wrong time in a down market at a lower point than your entry price. That is brutal. And it's the role of advisors like Acropolis and others in the space that are working with businesses to really help them understand that this is not about maxing out your Bitcoin position. This is about intelligently sizing the position so that volatility is not a risk to the operating business in any way. And you can sleep at night and you're not worried about what the price swings are over any short time horizon.
Exactly.
Okay, so we kind of agree that this trend of business Bitcoin adoption is not going away. Another interesting statistic, we kind of already touched on it when I mentioned kind of the increase from 2024 to 2025, but to put another set of numbers on it, businesses now hold 6% of the total Bitcoin supply. Strategy alone is accounting for about 3% of that. But that is ironically a 21x increase in business Bitcoin holdings since 2020. So what do you make of this trend? And if we are kind of surmising here that we are still super early in business adoption of Bitcoin because A, a lot of folks have only ever heard Bitcoin equals volatility, and B, a lot of the largest businesses in the world still can't drive the consensus building apparatus to add Bitcoin to the balance sheet, it makes you wonder if this 6% of total Bitcoin supply held by businesses today is going to be something like 76% a decade from now.
Yeah, it's a really great point. I mean, I think it's hard to estimate that because the unspent dollars that are coming from businesses to Bitcoin is measured in dollars, and the supply that you're talking about is measured in Bitcoin. And so the folks that decide between now and 10 years from now that they need to put Bitcoin on their balance sheet, they might have to pay a very different price for Bitcoin. And so, yes, I think it's a safe assumption that the percent of total Bitcoin supply held by businesses will rise. Hard to say at what rate and to what degree. It will be very much dependent upon how quickly folks realize that that is a really great move for your business and the price of Bitcoin along the way, right? Because if Bitcoin is $25 million a coin, well, then there's a lot less Bitcoin available to the Treasury to convert the cash Treasury of Apple stock, for as an example. And so that will be a huge driving force, I think, in the long-term uptrend in Bitcoin's price. But yeah, no, I mean, what's beautiful about Bitcoin is that it's mostly held by individuals. And I think that is playing out as I think folks have hoped, which is that individuals have access to this asset class at the same time, if not before, companies, which is a very unique phenomenon in what is the best performing asset class in history. So a positive shift from limited access, institutional investors get the first cut at things, to a world where anybody can buy or earn Bitcoin without permission from anyone else. And so I'm rooting for the businesses to understand Bitcoin because it will be positive for them, but I'm also not selling any of my Bitcoin to them.
Yeah, and to that point, in this same report, I'm looking for it right now. I think it was, I'll find it in just a second here. The percentage of total Bitcoin that is still held by individuals was something like, what was it, 65%, 70%? Do you have that number?
I'm scrolling through it right now. Yeah, it's custody. Here it is, 63.6%. Oh, this is businesses hold indefinitely and accumulate over time, which is another trend we should touch on. It's interesting. They surveyed the actual opinions of those business customers, and the majority of them are accumulating Bitcoin with an indefinite hold period and an intention to continue to accumulate over time. I don't know
Yeah,
if that
it's
stat is in here for the individual holders.
it is on page 3. It says individuals hold 65.9% of supply. So businesses are at 6.2% of supply. ETFs are at about 7.8% of supply. And by the way, ETFs are, I think, the only segment that out accumulated businesses over the last 12, 24 months. But individuals are still making up about 66% of total supply. Now, here is the race that I see as underway. We are seeing platforms like Arch Lending, our platform partner for Bitcoin-backed loans, and Strike coming out with their Bitcoin lending platform. And these rates are dropping, and they should continue to drop as two things happen: as the Fed lowers interest rates, and as the folks who are lending dollars to these over-collateralized loans realize that there's kind of a risk arbitrage, and that it's actually not a risky lending activity to loan against an over-collateralized Bitcoin position that you can margin call or liquidate in a moment's notice to make good on that loan. And so the race I see underway is, are individuals going to get educated and gain access to these Bitcoin-backed loans at a rate that doesn't scare them, faster than businesses wake up to the need to add Bitcoin to their balance sheet? Because for individuals, I think one of the things that many people misunderstand about why an individual would buy something like a strategy is that a lot of individuals are afraid to take leverage in their own lives, and that they're almost outsourcing the leverage risk to somebody like a Michael Saylor in that situation. And for folks, Bitcoiners, believe it or not, are actually risk averse. It's widely misunderstood, but Bitcoiners see Bitcoin as a risk off asset. And so if they're going to borrow against their Bitcoin, which, by the way, in many cases, you're putting the Bitcoin itself at risk of liquidation, which is something no Bitcoiner really wants to do. Once you've acquired that position, you really just want to avoid any possible way to move backwards. So if they're going to do it, they're going to need to see interest rates, borrowing rates that are low enough that they feel like, whether it's their personal income, some dividend paying situation, or just a long enough time horizon and on a loan that they can roll over, justifies borrowing against their Bitcoin so that they can buy that house, that new car, treat their wife to the nice dinners, whatever it is, to basically experience the benefits of their Bitcoin appreciation over time. Individuals do get educated enough and do get access to these products and services at good borrowing rates before mainstream S&P 500 style companies start adopting Bitcoin. I see a scarcity tightening like that we have never actually seen in the Bitcoin space, because ultimately the price has run up and it has found that marginal supply. It has found that individual Bitcoin holder that says, oh, you know what? This is generational wealth. This is life-changing wealth. I can finally buy my dream house. I can buy myself a boat. I can quit my 9 to 5. But if Bitcoiners, the individuals that make up that supply, don't have to sell, they're borrowing for their liquidity, and businesses of enormous scale are coming and trying to acquire that Bitcoin, I think we're actually going to see some of the first supply tightening, supply shocks that we've never actually seen. I mean, we've seen momentary mispricings in Bitcoin before. We've seen levels up where all of a sudden overnight people are like, yeah, it's a $2 trillion asset. And then we set like a new floor. But we've never really experienced the supply shock, in my opinion, that Bitcoin promises with its hard cap of 21 million and something like 19.5 already issued.
Totally. You nailed it. I mean, I think the credit to a number of businesses, but I would say primarily Strike and Jack Mallers and team have built a product set on and Arch, Ledin, Unchained Capital, Lava. There are many others, but just in general, the UX and the availability of Bitcoin from cold storage transferred to a platform issued into a Bitcoin-backed loan, dollars in your bank account. I think that has become a really interesting vacuum for what otherwise would be Bitcoin sell pressure. I totally agree. It's ironic that, Bitcoiners to the outside are probably perceived as the most risk-loving folks, but Bitcoin's this special case where actually the safest bet in crypto is to just buy and hold Bitcoin, and it also is the highest returning. Usually the safest bet in an asset class investing wise is also the lowest return. So that it's an interesting paradigm. So you get this scenario where you have Bitcoiners who are very conservative. And so, yeah, I think there's a cohort that are not going to get comfortable with the concept, but I've thought a lot about this concept, and ultimately, sized appropriately, the Bitcoin-backed loan strategy, both for individuals and for companies, represents an incredible positive carry trade financial engineering opportunity. But you have to be sized appropriately, because an 80% drawdown in the era that Bitcoin returns to previous levels of volatility is a situation where you need to have excess collateral available immediately to support that loan so you don't get liquidated. So I think, if you play it out in a microeconomics, like perfectly efficient market world, a lot of Bitcoin will never be for sale now. But the reality is that some folks will mismanage this trade and they will get margin called, and we'll still have cycles. But yes, I mean, if you take away all of the sort of retail sell pressure for Bitcoin with a tool like a Bitcoin-backed loan, there's not a lot of other sources of Bitcoin for sale. There's, I think, 450 or so on average per day of newly mined Bitcoins. And I think miners are always going to have to sell a portion of that to fund their operations. But completely agreed. And it's interesting, and who's buying these Bitcoins, right? I think a lot of it is Treasury companies, and people seem a little bit tired of the cycle. The summer can be exhausting because nothing really ever happens. I'm looking at the BitcoinTreasuries.net list of top 100 public Bitcoin Treasury companies. Numbers 3 and 4 in this list, in order of size of Treasury, have not even started their public Bitcoin Treasury accumulation strategies. And so the question is, how long does this market stay open for those folks? But boy, does that seem like a lot of upcoming buy pressure from large institutions issuing securities and using the proceeds from those transactions to buy Bitcoin. And on the individual side, I think that lots of folks are coming to understand the Bitcoin-backed loan strategy. And I pray that they all use it conservatively and we get to just go up forever. That probably isn't how it plays out. But yes, I completely agree. There is a scenario now. There's a path forward for the individuals, the 66% of supply, to effectively never sell their Bitcoin. But they're going to have to be very careful, and some of them won't. And so we'll still have volatility along the way.
Yeah, and all of this is to say we haven't even discussed nation state adoption, pension funds. There are a lot of pools of capital and even nation states themselves with the power of the money printer that have really yet to take this asset class seriously. So it's really just hard to imagine that scarcity does not increase, and that, really at the end of the day, Bitcoin is a belief that supply and demand is a real, model. It is a reality of the world, that if there is more capital chasing fewer and fewer amount of goods or services, that the price has to accommodate higher. And I think that's really something that we're going to see in front of our eyes here, and why I'm not convinced that the volatility is over, because I think that the volatility to the upside that is going to be created from these big players chasing this fixed supply of remaining coins to be issued is going to create the volatility not only to the upside, but also back down to the downside as sellers see price targets they like.
Yeah, I mean, I think the treasuries, like, people don't really think of it this way, but if you really think about what they do, the Fed is the largest issuer of securities in the world. They issue treasuries. When they come to understand what Andrew Hohns has so intelligently articulated with bit bonds, what does that do for the price of Bitcoin and for the demand for Bitcoin? And so you just have to wonder, when do the purchasers of those treasuries come to demand more standing behind that loan? And then it plays out for everybody all over the world.
Yeah. So with Acropolis being at its core a custody solution that offers a unique form of custody to businesses anywhere in the world of any size, we do have to touch on the custody aspect of this report. Roughly 1/4 according to Rivers report, roughly 1/4 of businesses self-custody at least a portion of their Bitcoin. There's a few other interesting call-outs there in regards to custody, but this is a real point of differentiation between an Acropolis solution and a River solution, so I do need to call this out. Acropolis exists to provide multi-institution custody to businesses. Now, this is a form of custody that kind of models the decentralized bearer asset ethos of Bitcoin by using Bitcoin's native multi-sig technology, but also removes kind of the operational or rogue employee type risk that would be associated with having key employees within the organization holding the private keys, the cryptographic material, and managing that. And so what you get with multi-institution custody is 3 separate legally distinct institutions that each are acting as a guardian of your key, and then you have more of a traditional banking relationship where you do a video verification, or I should say the authorized signers within your company do a video verification with 2 of those 3 entities whenever they want to move the Bitcoin. Now, at Acropolis, we believe that this is how we scale business adoption of Bitcoin, because when I look at this, in this report, these are folks who already have Bitcoin treasuries, and 1/4 of them are doing self-custody, which means that they're doing a mix of different custody solutions. They're basically trying to find the appropriate way to custody this Bitcoin for the long tail risks and the long term of their business. And I think that this is one of the biggest challenges, besides the volatility question and consensus building, is the custody in a corporate compliant way. What do you make of just kind of the various forms of custody available to businesses today? Has this historically been a blocker, and are we finally kind of seeing solutions emerge that address it?
So it's all trade-offs, and it's interesting. I mean, I think that the folks who are self-custody in Rivers' report, they have to be single owner SMBs. That is really the only scale that is ultimately the most straightforward for. I suppose you can do it at other levels, but the trade-offs become pretty challenging. And that is, if I'm the CFO or the CEO of a $250 million sort of middle market business that has Bitcoin, well, if I have the private key, and what happens very frequently in those roles is people change positions every 3 to 5 years. What is the trusted process where I hand off the private key material without taking it with me or otherwise introducing an attack vector? And so self-custody on its front is messy for businesses as they grow and scale. I don't think it's the folks in this report, but I know that there's a lot of large businesses holding their Bitcoin at Coinbase. And as an executive at a business like that, you have to be asking yourself, am I ready to answer to why I chose this when it goes sideways? Because there is a massive concentration of Bitcoin custodied at Coinbase, and there's a ton of risks associated with that. And ultimately, what I think is interesting about what you guys are building and really compelling is you can kind of have the magic of a multi-sig, but in a corporate wrapper that allows you to prepare and manage the situation where you have an employee leave the company who was on that sort of cohort, and not have to worry about, okay, well, is he going to take that ledger or Trezor or cold card with him? So yeah, I mean, I think that the custody landscape right now, for better or worse, the public markets are totally disregarding the approach to custody as a investment merit for choosing XYZ treasury company over another. And I hope that we don't see losses in any of those custody strategies. But it's clear that the market needs a solution, and I think Acropolis is building and offering it, which is a mix between, hey, I just have my Bitcoin at Coinbase and I hope that they let me move it, and the trade-offs between that and a sort of multi-institution custody offering where there are legal advantages to the structure included in that, where there isn't a single counterparty that can be compelled to hold your Bitcoin still, right? And so there's a ton of value in that. And I hope that more companies, as they come to understand Bitcoin, they work their way through that whole journey. Hopefully custody for the company side of things becomes a focal point. I mean, I know on the individual Bitcoiner journey, it often takes a full cycle or two before you really think through how perfect can I make my Bitcoin custody stack. And on the individual level, it's much simpler. But hopefully we see the same thing play out, right, over the next 4 or 8 years. Companies that are adopting a Bitcoin treasury strategy, either in the traditional sense or the financial engineering sense right now, will over the next, out of a decade, come to really be thoughtful about how they're doing their treasury. And I'm sure there will be multiple different ways from a custody perspective. But I think multi-institution custody is a really compelling way to do it. And I also wonder if the market trend here kind of forces even the really trustworthy and reputable businesses like River to start to offer something like that in their own way. And in the meantime, Acropolis is a great resource to do that. And frankly, you guys have the lead on that in a way that'll be really hard to supplant because you've been thinking about it and working with customers today for the last however long. And a lot of businesses, a lot of exchanges and other Bitcoin custody providers haven't even begun to think through how that might look and offer that to the market.
I think it's a really great point, which you just called out, which is basically in an individual investor setting, it's like get the Bitcoin and then you'll figure out the proper way to custody it or get it off of Coinbase over the next year or two, whatever. Some people never get it off of Coinbase, never really look at their custody solution. They just buy the Bitcoin and they think that their job is done. You really can't approach Bitcoin that way in a corporate setting. You really have to have the entire order of operations down to, risk managed custody thought out and in place before you make that acquisition. You can't just say, I'm a business, buy the Bitcoin, we'll figure out custody later. It really has to be kind of a comprehensive approach to how you buy and manage the asset. It's really just takes different considerations. And Acropolis is here to support any business on that journey. Scott, were there any other pieces of the report you wanted to get into today?
Not particularly. I mean, it's interesting. So we have to remind ourselves when we look at this data about the private market businesses that they're servicing, River is just one exchange. I mean, in their own report, they cite 11, including themselves, sort of competitors. And I would argue that they've got Unchained and a couple of others in the wrong category that are more sort of direct competitors. If we just assume that they have one, a simple fraction, by logo count of that market, it implies that this private markets Bitcoin accumulating businesses is massive. And I think that the public markets are having their day in the sun, but there is a huge opportunity for well-capitalized and successful, profitable businesses doing anything from being a Bitcoin-focused company to pool services in the Southeast US, you name it. The opportunity for them to have their own sort of version of a financial engineering trade with the private credit markets is really interesting. And I hope we see some folks start to contemplate that trade. I think a lot of the business owners that would be eligible for something like that just don't realize that it's a possibility. And I'm certain that their typical investment banker is not pitching them.
And it actually makes sense that we don't hear as much from private companies that are holding Bitcoin on the balance sheet. One, because they're not trying to promote, the stock to retail, of course, to create that flywheel. But if a majority of them are not confident in their custody setup, I would not want to advertise the fact that my company is holding Bitcoin and that we have key employees here holding private keys. There's
Totally.
not really an upside to promoting that. So that's a really other interesting aspect of SMBs who are using some form of self-custody and why we don't hear about them.
I've seen this trend play out with regards to cybersecurity. Private equity companies doing control buyouts in the private markets typically are pretty eager to announce their transactions when they close. And over the last, I'll say 3 or 4 years of my career, I've watched that trend change a little bit where the private equity fund wants to get their hands on the business and upgrade the cybersecurity stack before they announce that they have bought the business, because otherwise there is an entire cottage industry for crime around cybercrime and ransomware attacks, and watching that play out where, unless you're very confident in your tech stack, and this is completely Bitcoin agnostic, just a business being acquired, you get a little bit of PR. Oh, now it's backed by a private equity fund. That means they took out a cybersecurity policy. Let's try and infiltrate the tech stack there and take it for ransom, which is usually paid in Bitcoin, by the way, is an interesting phenomenon. And so I think the same concept from a security and privacy perspective is why you don't hear a ton of noise around the privately held businesses acquiring and accumulating Bitcoin. And also, I think for a lot of them, the same mentality that makes a successful entrepreneur is someone who's humble and just works their ass off. So for them, announcing on LinkedIn that they've accumulated Bitcoin with this quarter's cash flows is just, it's not part of their day to day. They're focused on building. And I think that's positive for the industry.
Yeah, and when you think back to that interesting stat that 95% of Americans have heard of Bitcoin, but only 6% have heard of the 21 million hard cap, it makes you wonder how long until the 95% of Americans that have heard of Bitcoin, some percentage of them are criminals or cyber criminals, and they hear that Bitcoin is a digital bearer asset that is in many cases being held on, essentially flash drives at Bitcoiners' houses. So yeah, it's time for Bitcoiners to treat the asset class like it's already $100 trillion asset, and think about your custody accordingly. And Scott, I think we can leave it there for today. Why don't you give folks some places where they can go and follow your work?
Oh, that's a great question. I tried to do a social media purge, so you can find me on LinkedIn, Scott Marmoll. I'm on Noster, primal.net/suitcoiner. I think that's it. Other than that, you have to find me the old-fashioned way. Bitcoin Charlotte.
Right. Great. All right. Well, thank you so much for your time, Scott. If you enjoyed this show, give it the like, give it the subscribe, and let us know in the comments if you want to see Scott back on here sooner than later, because God knows that I enjoy these conversations. So if you all do too, he could very well become a regular. I'm sure we could convince him. So Scott, thanks again for your time.
Lots of fun. Thanks, Chase.
Thanks for listening to this week's episode of the show. Don't forget to like, follow, subscribe, or leave a rating on your preferred podcast platform. One of the missions of Acropolis is to educate the public on the transformational benefits of Bitcoin and Bitcoin treasuries for companies. The more engagement we get, the more efficiently we can spread this message. Lastly, quick reminder that New Foundations is for informational and entertainment purposes only, and nothing should be construed as investment, financial, or legal advice. Companies interested in Acropolis can go to acropolistreasury.com to get in touch with our team.